Thank you for the kind introduction. Good morning. My name is Kiran Patankar, President, CEO, and Director of Maple Gold Mines. It's a delight to be here in Germany. It's our first time presenting in Germany. Wonderful country, great investor base, and thanks to Kai and the organizers for inviting us this year. We'll correct a couple of the intro discussions on our cash balance and market cap, but let's get through it. Before we get started, I just wanted to highlight that the picture that you're seeing on the screen was taken from our head frame at our Douay property just 2 days ago. We've just mobilized drill rigs. We're about to commence the largest drill program in the company's history. I've spent 2 years restructuring and resetting this company to set us up for the $4,000 plus gold price environment that we're in today. I think this is one of the most compelling exploration and development opportunities in the space. And the direction that you're looking at, which is west, is towards the Hecla's Casa Berardi mine. But this is between us and them is 55 kilometers of strike length along a productive gold break in the Abitibi, which we control 100%. So why Maple Gold Mines? Maple ticks every box, right? As I say, there was a presentation earlier where a gentleman was talking about portfolio allocation in this gold market, really allocating towards the explorers with tremendous upside and pre-production, pre-development stories where there's potential for great risk return profile. Maple, and there's a scorecard I'm sure as all of you have for high quality exploration and development companies, obviously jurisdiction, management, strong cash position, right partners, et cetera. Maple ticks every box, right? And when I say that and we go through the presentation, just bear in mind that Maple currently trades at a valuation of $16 per ounce US. Remember that, $16 per ounce US for all the things that we tick. Again, it's part of a restart story, reset story, so sometimes it takes time to claw back that value. We've obviously moved up from a 20 million market cap company when I took over in 2023 to roughly 100 million market cap today. We control 100% of a 481 square kilometer district scale land package in a tier 1 jurisdiction in Quebec. It's not remote. It's got infrastructure on the property. You've got that exploration sizzle with a big land package and lots of room to grow, but you already have established ounces. There's 3 million ounces currently on our Douay project. It's growing. We're expecting the resource update later this early next year. We do also have a high-grade, past-producing mine complex, which was Agnico Eagle's first producing gold mine. The reason why Agnico Eagle is named Agnico Eagle is for the Eagle mine at the Joutel mine complex. So we control the namesake mine of Agnico. It's shut down production in 1993 after producing 1 million ounces at 6.5 grams. And it never really saw any systematic exploration after it was shut down. We've talked about exploration potential. I'll walk you through a couple of slides to show you just what the opportunity looks like. But the important point is got to have a business plan. There's a clear path here to growth and re-rating. So shareholders that have looked at the share price know that a lot of companies have moved up in the sector because of the gold price. We've moved up because of successful execution, and there's a lot of room to go. We've got fully funded 30,000 meters worth of exploration. Our G&A costs are down. We've got 2 years of G&A fully funded, and we trade at a significant discount to the peer group, so there's still a lot of room for us to re-rate. And the key thing is, as Pierre Lassonde said in Zurich a couple days ago, when you have good people, good things happen. When you have bad people, bad things happen, right? So we've changed the entire team at Maple. We've also got great partnerships with Agnico, long-term shareholders, et cetera. Just to cover the cap table, since we were introduced as having a 70 million market cap, maybe that's 70 million US, we're about Canadian 95 million as of November 12th, listed on 3 exchanges, trading at around $1.50. Volumes have picked up, very tight share count, 61 million. We just put out our third quarter financials yesterday, so 61.7 million shares out, 73 million fully diluted, and these 9.4 million warrants, they're all in the money. The average strike price is 88 cents. The 85-cent warrants we issued on a strategic investment by Michael Gentili. Those warrants have an accelerator at $2.50. If those are exercised, it brings another $5 million in hard dollar into the treasury. So we're well capitalized with $20 million in the bank. We've got analyst coverage from Agentis and Paradigm. Expect to see that research coverage grow. And the important thing is we've got the right shareholders. 50% of this shareholder base are strong long-term shareholders. We have Franklin Templeton has just come in as a 10% shareholder. That 8 million cash balance has been increased by a $13 million private placement where Franklin Templeton was a lead order, took a 9.9% position, well supported. Agnico at 13%, Michael Gentili at 4%, but partially diluted 9.9%. and insiders and myself at 1.6. In terms of people, I just want to highlight my background is I'm a geological engineer by training, Colorado School of Mines, worked in industry for a number of years, got an MBA, did investment banking for 8 years. So I have a foot in both worlds, technical and capital markets. We've put together a stellar team. Ian Cunningham Dunlop is an advanced project developer. He's worked with High Gold, he's worked with the Oxygen Group and Mark O'Day all over the world. We're delighted to have him. He's running our programs efficiently, productively. He's our VP Technical Services. And our board consists of, Gerald Riveren, a VMS expert in Rwanda, Darwin Green, who's here at the conference, excellent geologist. Also want to highlight Mark Legault and Chris Adams, both joined us in August of this year. And Mark Legault spent 31 years with Agnico Eagle. He went from mine geology to project development to running operations in the Americas, retired from Agnico Eagle in 2022. This is what happens when you have a strong partnership, right? This is somebody who knows how to take a project from exploration to development and into production the Agnico way. So it's a delight to have him. And Chris Adams, when we get to the development stage, Chris is a project finance guru. He ran project finance. We were colleagues at Macquarie when I was an investment banker, and Chris has run project finance packages for projects all over the Americas for 20 plus years. Michael Gentili is a strategic advisor, and Paul Harbage with Faraday Copper, sold GT Gold, also ran exploration for Rand Gold, and Goldcorp is on the technical advisory board. So when you have the right geology, you attract the right strategic partners. You can't ask for a better partner than Agnico Eagle. Here, what we've done is we've restructured a joint venture originally with Agnico Eagle. They saw merit in the project, not just in the company, so they invested in both. We thought it was an optimal structure when I came in to really take 100% control of the project so that we could advance it in the entrepreneurial way that most junior companies like to operate. Agnico has tremendous exposure to the project via equity in Maple. They became the largest shareholder of the company at a premium in 2024 at 19.9. Continue to support on financings, but the important thing is that they've spent a lot of capital. They continue to spend capital. And if you look at their third quarter earnings and all their financial statements, they're generating $1.7 billion of free cash flow per quarter, mostly out of operations in this region. They need to replenish ounces from a productive region for them. Where are we? We're located, as I said, in the Abitibi. There are 3 productive gold breaks in the Abitibi. We're on the Casa Berardi Deformation Zone. We're just east of the Casa Berardi mine. The most important thing here is it's a tremendous geological endowment, but 200 million ounces produced, but lots more to find. And this project, from a geologic standpoint, it ticks every box, right? It's got all the right elements in terms of located along a major break. It's got a alkaline intrusive complex, which is pretty rare in the Abitibi. It's got orogenic gold. It's got VMS gold. It's got lots of different styles of mineralization on a single land package. All the things that you would, if you had a scorecard for what do you want to see in a tier 1 world-class district scale project, this one ticks every box geologically. And it has infrastructure, right? So it's got a road that runs right through the property, which connects the mining corridor of Val-d'Or and Rouyn-Noranda to Matagami. It's a highway all season. You can drive right to the camp. We're also connected to Quebec hydropower, 4 cents per kilowatt hour. So the development side of this is very logical. The more ounces we find, this is not remote ounces that depends on the government to invest in infrastructure. The infrastructure is already there. And you can see just how many mines are in the region, how much mill capacity, other things. So, and again, the fact that we have Agnico as a partner, you can see some of their key operations surrounding our property. Pictures are worth 1,000 words. Most early exploration, grassroots projects do not have a head frame sitting on it, right? Why do we have a head frame sitting on our project? It's because at one point in 1997, when the gold price was substantially lower, Orezon had this project, and they actually wanted to go into production at Douay West. At those low gold prices. They dropped tools, they put an exploration shaft to the top of a bedrock, they're ready to go, and then they discovered Casa Berardi. And then subsequently it became a mine. They were acquired by Hecla. So we have mining infrastructure in place because we believe at some point this is going to be mined. Certainly $300 to $4,000 gold, it brings a lot of things into play, but there's a lot more gold to find. But just to show you that this is not moose pasture in the middle of nowhere in Quebec. So the priorities for the company, we've got a 30,000 meter fall-winter program that's just about to kick off. We're expanding our resource from 3 million ounces. We're expected to deliver a resource update early next year. We're de-risking the project with scoping and engineering, and the important thing is we're preserving a resilient balance sheet by just doing smart financings, right? We did a raise at 60 cents. 2 weeks later, we did a raise at $1.20. We keep our balance sheet pristine. We spend money the right way in the ground that's going to create value for shareholders. G&A is $2 million a year. Focused exploration, disciplined development, you get both. Obviously, the portfolio manager talking earlier is it's nice to invest in one. Here you've got the big sizzle of early stage grassroots type exploration on a big portion of this land package that remains without a single drill hole in it. But you also have the established ounces that are growing with a real development pipeline ahead of it. So you get both for the same investment. The resource is roughly 3 million ounces. It's split between indicated of 500,000 ounces at 1.6 and 2.5 million at 1.0. This was done at $1,800 gold. This was done with Agnico as a partner. So unlike most resource companies that just look for consultants to do their resource, this was done with Agnico's internal resource modeling team. They signed off on the resource, and there's lots of upside potential in the next resource. Just to illustrate what that is, this is a snapshot of what the resource looks like in a plan view. Just remember that's a postage stamp size of the overall land package. These are the $1,800 gold pits outlined in black with all the drilling, including drilling from, in red, you see 10 gram per ton hits, and then everything down to 0.3 grams. We use a 0.45 cutoff, right? It gives us a deposit overall that's above a gram. And there used to be the rule of thumb in the Abitibi. If you have over a gram open pit deposit, that's the one that can make money. We have now probably one of the higher grades amongst some of our open pit peers. But here's what happens if you take the cutoff grade. We're not going to do this, but just to show you what the illustration of upside is. Everything in beige is what's currently included. At 0.3 cutoff, these are what the pits look like, right? This is 6 kilometers of strike length by 2 kilometers. And I'll show you what that looks like in long section, right? This is what the pits look like at $1,800 gold. There's a lot of material that was left behind. The important thing here is that below 500 meters, I mean, this is why Agnico's invested. This is why Franklin, Templeton, others are investing in this company. There is no drilling below 500 meters, right? Limited drilling, couple of holes. This is the Abitibi's signature is growing to depth. And you can see with some great drilling that we've done, we've hit some spectacular holes, including one of the top 5 drill holes ever drilled on the property with our last program. It was hole 338, which was 2.1 grams over 109 meters, including 5.1 over 17. These are underground, bulk mineable all day, every day. This is where we have 2 rigs turning, is at the Nika zone and the 531 zone. These are the areas where we see the potential for real resource expansion. We are drilling in these areas. We have 20,000 meters planned here. And you can see basically the breakdown. I mean, even from a development standpoint, you can see where the starter, where the head frame sits. I mean, there's potential here in our scoping study, engineering study to look at a starter pit optimization between open pit, underground, process flow sheets. There's good metallurgy that's been done on the project. It's very detour-esque. So there's a lot of things that are going to be answered over the next 12 to 15 months, again, fully funded. Just a word on Joutel. Remember I said we trade for about $16 US per ounce. That's only for the ounces that we have at Douay. Right, that gives us no value for the blue sky exploration potential, 55 kilometers of strike length on the Casa Berardi. Gives us no value for this Joutel mine complex, again, which was Agnico's first mine complex, right? There was an open pit mine and 2 underground mines. They produced 1 million ounces, 6.5 grams. This is a new block model that we have done as a team with Agnico's data, which they digitized and QA/QC'd as part of our joint venture. We have a working model. We have SLR reviewing this model right now, but we see the potential for a maiden resource at Joutel approaching 500,000 ounces. And it's not just the low-hanging fruit around the mine ounce. I think we're just looking at, here we're looking at a slice of 30 meters width of the main mine horizon, which is the only thing they ever tested. There's the potential to extend this, to expand it, and we're going to get after it with drill rigs right now. We've got 2 rigs here at Joutel. So just to conclude, I think this is one of the most valuable opportunities in the exploration development space. I think if you look at just where we trade relative to the peer group, the boxes that we tick, these are the handful of companies in Canada with 3 million ounce plus gold projects with infrastructure. 2 of them have just recently been taken off the board for roughly $68 to $70 US per ounce. The average is $42. So your downside here is a re-rate from Maple going from 16 to 42. It's 2 to 3 times lift, but that's not why we're here. We're here for big district scale upside exploration potential, which delivers asymmetric returns. So with that, I'll stop. Thank you very much. I'll take any questions you have.